We had that retail sales growth of 5.6% year on year for February, down from 6.3% in January. Is this a bad number, a weak number, or just a less good number than we have seen in the previous few months?
I think one could rather say it was just a less good number. We are seeing a slow trend off from the very strong December sales. And I think 5.6 is a real number, given that that's excluding inflation. So we're talking about volumes here, is actually a very strong sustainable level to be ending up at.
And it seems like there were some quite diverse results from the various retail groups. So we had pharmaceuticals and beverages growing by almost 11%, and yet we had food and beverage retailers shrinking by 2.5%. What's that telling us about the retail picture in South Africa?
Well, just firstly on the pharma, it's very difficult to read anything into the pharma stats. Whenever we get them, they're very erratic and they don't really give us very good see-through into any of the pharmaceutical retailers. But if we can just focus on the food firstly, that I find slightly confusing, because we are certainly not getting that message from the listed food retailers. The minus 2.5%, we're saying that volumes are down 2.5%. Almost all the food retailers that have reported, even Pick n Pay that showed a relatively weak result, is showing roughly 1% volume growth. And I think the difference maybe there lies in the inflation, because they are not seeing the extremely high inflation yet that the CPI is showing. CPI inflation is implied to be roughly 3-4% in this for this month, the February month that we're talking about. And the food retailers have really seen practically no inflation yet. For that month, they haven't. While they are expecting some inflation to come through. So I think the mix really here is in the inflation versus volume mix. But if we look at the overall growth that the nominal sales of these food retailers are growing at, it does tie in roughly with what we're seeing in the Stats SA, which is roughly 2.5-3% growth. So I think in this case, I would rather look at the net amount. What may be swaying the things here is that the food retail is obviously made up of the formal retailers, which is roughly 65%, and then the informal, where we don't have all that much see-through as analysts of listed companies. And it's possible there that the inflation is already significantly higher and the volume's lower. But what we're seeing in the listed space certainly doesn't reflect quite what these Stats SA numbers are saying.
Well, we also had numbers out of Pick n Pay at the beginning of the week, and they appeared pretty negative by most accounts. Do you think Pick n Pay perhaps falling into the negative, while some of the other retailers, the food retailers like ShopRite and Spar Group, doing quite okay during that period?
Yes, I think that is the case, but even, as I said, even Pick n Pay is not seeing quite as low sales growth as 2.5% like for like. So yes, Pick n Pay certainly is lagging, and we are seeing stronger numbers from Spar and from ShopRite, but even Pick n Pay is not down 2.5%.
How do the retail sales growth figures tie in with what you've seen coming out of some of our clothing retailers? Because we had Foschini out at the beginning of the week with the trading update. It expects profits to grow by 19 to 22%. And Truworths also recently out with some numbers that shows it's showing pretty good sales growth at this stage as well. Does that tie in with the numbers you're seeing coming through from Stats SA?
Yes, the clothing numbers are tying in far closer. The clothing Stats SA numbers, the growth is roughly 5.5%. Volume growth, and that is what we are seeing in most of the clothing retailers. If you remember, Truworths came out with a trading, an acknowledgement of what the trading was like post their year-end results, and that was also roughly 9%. So if we take out new stores, we would be ending up at sort of those numbers. Foschini, we're definitely are expecting far stronger sales growth than what we're seeing in Stats SA, but I think that's a little bit of an outlier. Also trading off a very low base from previous years. So that may be the one that's much stronger than the others. But almost all indications from the Woolworths, Mr. Price, is that we are sitting far closer to that 5% like-for-like growth. Once again, there we will be expecting far higher inflation going through, so the nominal growth will be higher than that as we enter into this year.
Well, one number that looked particularly good was for hardware, paint and glass retailers, 16.7% growth year on year in February, and that's really running at odds with what we've seen coming out of some of our construction and cement companies like PPC. Do you think for hardware stores and hardware suppliers they're seeing a bit of a recovery before the rest of the sector?
Yes, I think they are. once again, if I can just delve into those numbers, that is off an extremely low base. Last year, this time, the sales were down 12 to 13%. So it's really just a recovery from a very low base. But one would expect that the renovation market would pick up way before the building and construction market. And I think this is what we're seeing. People paint their houses and fix things way before they actually go out and add on a new part to the building or actually go ahead and build a whole new house. So it is a bit of a leading indicator for the construction market.
Well, what would you expect going forward from that 5.6% growth that we saw in February, and particularly for the Easter period? Would you expect to see a bit more buoyant growth, or do you think the consumer is still very much constrained in South Africa?
I do think the consumer is a bit constrained, but I think that it's a very reasonable level for us to see right throughout the whole year. For Easter, though, we could very possibly see a stronger number coming through, just because the way the Easters fall this year versus last year. But I think as a whole, 5% is a very reasonable real number for us to see going through the year. We are definitely going to see more inflationary pressure, and hence the consumer we really can't expect a big rebound from the consumer, particularly in volume terms.